Yo guys, welcome back to Stock Talk Insider. Today I will be talking about the SoFi earnings today. So yeah, let's get right into it. But before we go right into it, I just want to show you guys my portfolio so that you guys don't feel alone in where you maybe stand. Maybe you are up, that can. It's always possible you're up. But for the people who are down, and especially probably the most of you guys, I am also down 6.1%. So yeah, I went down from the highs of last week for 41,000 total amount on the portfolio to now 37.6 thousand on the total amount of the portfolio. So between $3,000 to $3,500 down, which makes it actually almost 10% since last week, which is a pretty big hit. But of course, we can handle it. We don't care actually, because we are looking deep into the future in where we want to stand. So I have 4 positions: AMD, Palantir, SoFi, and Tesla. My thesis on those companies have not changed. And that's why I just keep these positions. If those would have changed, I would have already sold them, and not because of the deep seek news, but because I just don't believe anymore in those companies, but I still do. So let's get right into SoFi. This is where the video is all about, of course. So SoFi, we're down $2.2, which actually translates in a 12.25% down day to day, and we are at $15.73. SoFi hit it today at minus almost 16%, but also a very important one is that Nvidia is down at this moment. Let's look at it. Nvidia stock, just before we really start, 17.3% down. I personally think it is an overreaction, and of course if you look at SoFi earnings, their guidance wasn't really that good. And if you take into account that you have a day like DeepSeek where actually whole of the market is down on micro data, then you will have a down day even on good earnings. But of course, when guidance is bad, that is also not really helping. And if you have the tech side of the company, which is growing, but especially not at the way we want, of course. So if we go into the investor presentation for Q4 2024 and the full year guidance and performance of 2024, we will see that we have a record adjusted net revenue of 2.61 billion, which is a 26% year over year. A record adjusted EBITDA of 666 million, which is also a 26% adjusted EBITDA margin. A record adjusted net income of 227 million, or GAAP net income of 499 million. Record adjusted EPS of 15 cents and a GAAP EPS of 39 cents. First year of full profitability, tangible book value of growth of 1.37 billion to 4.89 billion. Then we have the Q4 numbers. This is record adjusted net revenue of 739 million, which is up 24% year over year. We have a record adjusted EBITDA of $198 million, 27% adjusted EBITDA margin. Adjusted net income of 61 million, or GAAP net income of 332 million, fifth straight quarter of profitability, which is also nicely adding up. Adjusted EPS of 5 cents, or GAAP EPS of 0.29 cents. Then we have tangible book value growth of 465 million to 4.89 billion. Then we have member growth. As we know, actually almost a month ago, SoFi already hit 10 million members. So since then, now with the whole of 2024 full year guidance and the Q4 earnings, we have a total of 10.127 million members. So since a month ago, they already got 127,000 members more. So that is very interesting to see that they are actually growing very fast with their members growth, faster than actually we think, because a lot of people predicted that they would especially really get those 10 million by by Q1 of 2025. Yes, that was it. By Q1 2025, but we actually already got it before Q4 of 2024. So before the 2 quarters that were ahead of getting the 10 million. So I believe that SoFi, if they just keep doing what they are doing, will almost have 11 million by Q1 of 2025. That's of course my opinion. You can also have your own opinion, but that is what I believe. So we have around, this is a very important one. We have, of course, we have a year-over-year growth of 34%. It is slowing down, but that's, well, normal. But if you have 10 million members and still growing 34% year over year, that's pretty good. But the important thing that I wanted to show you guys is that we have new members of this year. We got that to 2.8 million. So keep that in mind. We have 2.8 million new members this year. So if we go further, of course, we have the tech platform. It is growing faster than the year before. When it got from 31% to 11%, it is now actually going better than the year before. So that's a nice 4% increase from last year. Hopefully we get that more increased volume in next year for the guidance of 2025, of course. At this moment, we have 168 million tech accounts. So if you go further, we also see that the tech platform is giving 47% of the revenue. So that's also nice to see, which you can see here, 1.2 billion against the 1.3 billion. So around 150 million less than the other adjusted net revenue. So we also see a nice growing in this segment. I believe that we will be over 50% maybe by 2025 guidance. But of course, 2025 will be a big year for SoFi. As we know, 2024 was the best year of SoFi so far. So let's get further into the things that I wanted to show. Also here, another visual for the revenues. This is already something about the guidance, but well, I just want to go one slide further, and this is where it is really interesting to see. So as we know, we have the 2.8 million member growth we had this year. So if you look at the guidance, they foresee a very nice revenue growth, which is more than the expectations of analysts. Then we have the EPS, which is actually less than analysts' expectations. So if earnings per share are less than the analyst expectations, but they are going for more revenue, then we also have 2.8 million members. I'm trying to get in my English words because I'm struggling at this moment. But all right, I know. So we have 2.8 million this year in members growth, and they are foreseeing 2.8 million again for next year, but they are spending a lot more, and that's why their EPS is not growing as much. So what I mean with that is, if you are spending more, so investing more, and that has an impact on your EPS, but of course your revenue keeps going because your revenue hasn't really got anything to do with your expenses, because revenue will be revenue. Of course, you can get more revenue out of the type of investments that you make, and of course that is a case. But what I straightforward really mean is that if you go for 2.8 million, which is literally the same as this year in members growth, and you're gonna spend more on investing, well, then you should get a higher member growth expectation. So this 2.8 million is of course a 28% from the 2024 levels upside, but the EPS is just not what it should be in expectations to what their member growth is. So yes, they have actually they have more revenue guidance than analysts expect, but they have lesser diluted EPS than analysts expect. So that's the problem with SoFi. They are too conservative with what they are showing on their guidance. So we have 3.275 billion in expectations, 26% upside, which is very nice, of course. Then we have more spending because of investings, but you should directly think that it would make an increase in guidance towards the 2.8 million members, and I would think that you might bring it above 3 million members in 1 year, because I believe that by quarter one they will already be above 11 million. So that's a very big thing, and this is why SoFi actually went down. So their revenue is growing more than expected, but the EPS is just going more down than expected. So it is not going down, let me say that. It is just not growing as much as analysts expect. So I'm just trying to cover this to you guys in the most easy way, that it is not really efficient and logical that they are not growing members as they are spending more in investing, because 2.8 million is literally the same as this year. And if you go to members again, where is it? Well, so the interesting thing with the members growth is that you have the chart that goes up with the growth and the market share it's getting from what they are doing, so the market share they are gaining. But at this moment you also have the members gaining, so there's less and less and less room to fill with members, because there are just that much people who need banking, and they need services of SoFi. So you are shrinking the amounts of growth you can make. So again, maybe if you take the 28% of members growth, that would be very good and very good growth, because they are still growing, but it would mean that their members growth per year would become flat, and that would not be increasing anymore. But if you take 1% more or 2%, let's say they go only down 4% in the growth, so they will take a 30%. So they will go down 4% instead of the 6% they are thinking to go down. This will make, if I take it first, plus 30%. Then we have a members growth of 3.03 million. So 3,038,100 members. So of course the 28% can be the normal way to grow, but still, if you take all of the investing that they will be doing, it is just sad to see that they actually just take the same amount of growth in members as they do now. But still, of course, keep in mind, growing is growing, so adding up the members is adding up the members. The percent can go down, but as long as there are members coming into the SoFi organization, it is a very nice thing. But still, of course, it is sad to see that if you have so much investing, the members growth is going down. So that's one thing, and especially when you have the revenue growth, and of course, yeah, the revenue growth is there because of the growth of the members. But in a way that we see it now, we have 10 million, 10.127, and if we add to that the plus 28%, then we would have 12.9 million, but of course 12,962,560 members, and I think it will be a little bit above that. I think we will end above 13 million. It is a really small place to be right in, but I believe if I see the number right in front of me, 13 million will and would be a very nice piece of growth in members. So yeah, I believe that 29% or 28.5% would be a very nice growth. So yeah, I'm interested in how that will be going, but I still think that it is a little bit double feeling if you look at that. But of course, that's that, and I want to thank you guys for looking at this video. If you have more questions about DeepSeek and then why the market is down, go look at the other video. I went more deeper into that, more deeper into DeepSeek. But this is the SoFi earnings for 2024 Q4 and 2024 full year guidance. So again, it was a bad day for SoFi to report on the DeepSeek news. Then we have, well, they haven't gotten to do anything with it, but it's just the environment they reported earnings in. Then we have the guidance, which is actually not really that good and not really that bullish, but the numbers are very bullish. And the call, well, it picked up a little bit of traction again because of the call, but again, it is very nice to see. But the way that they just maybe saying it is not bullish is a big word, but and a big sentence, but I believe they can just do very much better on the guidance. So we have this DeepSeek news, we have the guidance that's actually not bad, but pretty poor, let me say it like that. And then we have, of course, the fintech side of SoFi, which is growing. It should just have a little bit more traction and a little bit more growth, for which fintech is actually headed towards. So, well, that was my opinion and in what the earnings of SoFi were. So I'm looking forward to 2025 and the SoFi story to continue in this year. And well, thank you for watching this video and see you next time.